Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business and pull back the curtain on corporate filings to see what really matters. Today we are diving into a filing from a household name, a company that has been around for ages. We are going to break down what their latest report from January 2026 tells us about their financial health and their future. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings in more detail, so come join the conversation. So what we have here is a current report filed by the Procter & Gamble Company, or PG as they are commonly known. This report is an 8K filing, which essentially means it is for special events or information that is considered significant enough to be reported to the public right away. The earliest event reported here is the 22nd of January 26, which gives us a snapshot of things happening around that time. Now, PG is a giant in the consumer goods world. We all know their brands from toothpaste to diapers. This filing shows us some of the securities that are registered with the stock exchange. We are talking about their common stock and a whole list of different kinds of notes or debt they have out there. Think of notes like loans that the company has taken out from investors and promises to pay them back with interest. The fact that they have so many different types of notes ranging from short-term ones to ones due in 2045 shows the scale of their borrowing and their long-term financial planning. Their common stock is traded on the New York Stock Exchange, or NYSE, under the ticker symbol PG. This is the most basic way people can invest in the company, owning a small piece of it. Here we see a variety of these notes listed with their interest rates and when they are due to be paid back to investors. For example, there are notes with interest rates as low as 0.110% due in 2026 and others carrying higher rates like 6.250% in British pounds due in 2030. It is important to understand that these different notes represent different debts the company owes and how they are managing their financing costs. When a company has a lot of debt, it needs to be managed carefully to ensure it can meet its payment obligations. Now let's get to the meat of why this specific 8K was filed. This part is about Regulation FD, or Fair Disclosure. Basically, this regulation is in place to make sure that all investors get the same important information at the same time. There can't be any secret meetings where some investors get good news before others. PG is announcing here that on the 22nd of January 2026, they released a press release about their second quarter financial results, and they also held a conference call to discuss those results. The company is furnishing a series of slides that were used during that conference call. They are also available on PG's website. This section tells us what documents are being filed along with the main report. The important exhibit here is Exhibit 99.1, which are the informational slides from that conference call on the 22nd of January 2026. These slides are likely where we will find the actual financial numbers and the company's commentary on their performance. While we don't have the full slides directly in this filing text, these types of exhibits are where companies present their earnings, per S-hair their revenue figures, their profit margins, and their outlook for the future. In essence, these are the slides that digest the raw financial data into a story the company wants to tell its investors. Finally, on the last page, we see the signature of an authorized representative of the Procter & Gamble Company. In this case, it is Sandra T. Lane, an assistant secretary attesting that the information provided in this filing is accurate to the best of her knowledge. This confirms the report is officially submitted to the Securities and Exchange Commission. Now let's really dig into what these slides likely contain and what it means for PG when we look at a filing. Like this, especially when it includes investor presentation slides, we are looking for the company's performance metrics. We want to see their net sales, their earnings per S-hair, and how these numbers compare to previous periods. A key area of focus will be revenue growth or decline. If sales are up by 5%, that sounds good, but if their competitors are growing at 10%, then PG could be losing market share. Conversely, if sales are down by 3%, we want to know why. Is it a general economic slowdown, or is it specific to PGS brands and products? We also need to look at profitability. Are their profit margins expanding or contracting? This tells us if they are becoming more efficient or if their costs are rising faster than their sales. For a company like PG with such a diverse portfolio of products, we want to see which segments are driving growth and which are lagging. Are their baby care products performing well while their grooming products are struggling, or vice versa? Understanding these trends helps us gauge the company's strategic direction and how well its products are resonating with consumers. Another critical aspect is debt. As we saw, there are many notes listed. We need to understand the total debt load and how it compares to the company's earnings. A healthy company can manage its debt easily, but if debt levels are too high relative to profits, it can become a significant risk. We will want to know if they are generating enough cash to pay their interest expenses and to repay the principal on their loans. Beyond the numbers, we should also consider any forward-looking statements. Companies often provide guidance on their future expectations. Are they optimistic about the next quarter or year? Are they forecasting growth or facing challenges? This guidance is crucial for investors trying to decide whether to buy, sell, or hold the stock. Looking at PG specifically, they operate in a highly competitive consumer staples market. Their brands are well established, but they face constant pressure from both global and local competitors. They need to innovate and adapt to changing consumer preferences like the growing demand for sustainable products or the shift towards e-commerce. Their ability to manage their supply chain effectively and to control costs is paramount in this environment. So what is my take? Based on this filing, which points to an announcement of second quarter results, PG is providing an update on its core business performance. The variety of debt instruments suggests a sophisticated approach to managing its financing needs. The emphasis on furnishing investor slides indicates a focus on clear communication of financial results. While this particular filing doesn't give us the specific numbers from those slides, the context is clear. PG is reporting its financial health and strategy to the public. The strength of PG lies in its iconic brands and its vast distribution network. Its weaknesses could stem from intense competition and the need to constantly innovate in a rapidly evolving consumer landscape. The opportunity is in capitalizing on emerging market trends and expanding its global reach. A significant risk would be any disruption in its supply chain or a failure to respond to shifts in consumer demand. Overall, PG historically demonstrates resilience, but investors should always scrutinize the detailed financial performance presented in those furnished slides to truly understand its current trajectory. Alright, that's our breakdown of what this PG filing tells us. What is your take on these numbers and what they signal for the companies? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.